Very good morning, everyone. How are you all? Everyone fine? I am also doing great. Today we are taking lecture number 2 of CA Inter Advanced Accounting regular batch. Last day, we started with a basic concept related to CA foundation, which might be important for CA Inter Advanced Accounting. We have done with the 5 concepts. The first concept what we have done was approach of accounting, that is golden rules of accounting and modern rules of accounting, and I have asked you to use now from now onwards modern rules of accounting. It does not mean that we can't use golden rules of accounting. It is simple to use what modern rules of accounting. What we have done in that if there is a capital, liability or income, the rule is what increase will be created and decrease will be debited. And for asset and any expense, increase will be debited and decrease will be created. Simple rules. Then we have done with the accrual concept, matching concept, conservatism and substance of a firm. This much we have done in the last class. Now today we'll take 3 more concepts, and out of that the first is GP margin. GP margin is nothing but related to mathematics, which will be actually used in your accounts to solve any problem. So what is GP margin? Just try to understand. Gross profit, you all know gross profit. You all know about gross profit, correct? Now gross profit means what? Sales minus cost price, correct? It means, can I say in this way, the cost price plus GP means profit is equal to sales, or we can say if 100 is this and 20 is GP, so this is 120. Now if I want to calculate GP margin percent, so what you can do, you can calculate GP margin in terms of cost. So GP gross profit margin in terms of percentage will be GP divided by cost, which is nothing but 20 by 100, which is 20% of cost. 20% of cost. Same thing, can I say in this way, GP percentage in terms of sales will be GP divided by sales, which is nothing but 20 by 120, and that will be equal to how much? If I will say 20 by 120, so 20 divided by 120 is equal to 16.67% of sales. Means, can I say in this way, 20% of cost is actually equal to 16.67% of sales. So in exam, your GP margin can be given in terms of cost or in terms of sales. So you need to understand whether it is given in terms of cost or in terms of sales. That area, sometimes when students do not read the question carefully, or they don't give importance to this particular concept, they may lose some marks in exam. Got this point? For example, just write down. For example, if I say, just try to understand. If I say cost of goods sold is equal to 10 lakh. Now they have given GP margin, that is 20% of cost. 20% of cost. So of course we can apply, and GP is equal to 10 lakh is cost into 20% directly you will give, and that will be 2 lakh. That will be 2 lakh, correct? But if I say in this way, example, just try to understand. If I say sales, they have given sales is equal to 12 lakh, and now they have given GP margin is equal to 20% of cost. So can you say now 20% can't be applied on 12 lakh, because they have given you sales and GP margin is in terms of cost. So first we need to convert 20% of cost in terms of sales, correct? Now, so what we'll do, it will be 16.67% of sales, but what we'll do, we'll say 100 plus 20 is equal to 120. Means if 100 is the cost, 20 is the GP margin. So sale is what, 120. So 20 by 100 is equal to 120 by sales. 20 by 100 is equal to 20 by 120 of sales. 20 by 120 of sales. 20 by 120 is nothing but it is 16.67% of sales. So in this case, your GP, what will do? GP is equal to sales. Sales is what, 12 lakh, and you will do 20 by 120. 20 by 120 means 16.67% only. You can directly write on 16.67% also. Are you getting what I am saying? So that will be equal to also what? 2 lakh. Means your GP in example number 1 and GP in example number 2 is same, because what I have done, 10 lakh plus 2 lakh is sales only. So I have converted that question by giving the information for sales. Same question, but GP margin were different. So in the first example, GP margin was in terms of cost, and in second example, GP margin was in terms of sales. So you need to understand when to use which margin. So whenever sales information is given, you need to multiply sales information with GP margin in terms of sales. Whenever cost information is given, you should multiply cost with GP margin in terms of cost. Got this one? This is concept. This is nothing but mathematics. Okay, sir. Means can I say in this way? If GP margin is 25% of cost, we will say 25 by 125 means 25 by 100 of cost means 1 by 4 of cost, which is nothing but, or we can say 25 by 125 of sales, which is nothing but 1 by 5 of sales. 1 by 5 of sales, correct? Means 1/4 of cost is always equal to 1 by 5 of sales. So if they have given 1/4 of cost, you can convert in terms of sales by taking it as 1 by 5 of sales. Means I can say in this way, 1 by 6 of cost will be 1 by 7 of sales. Correct now? 1 by 6 means here 4 is the cost price and 1 is the profit. Means simple what I am saying. If the 4 is the cost price, 1 is the profit, so sale price 5. So 1 by 4 of cost is equal to 1 by 5 of sales. Simple mathematics. So we will normally do in this way. So whenever they have given GP margin in terms of sales, we can convert that GP margin in terms of cost if required. Whenever they have given GP margin in terms of cost, we can convert it into GP margin of sales if required. Got this fine? Have you understood this? Are you getting what I am saying? Correct? Any doubt? No doubt. So what we can do, we can convert GP margin as per the requirement of the question. As per the requirement of the question. Okay. Yes, sir. I think no more explanation required for this. Okay. So this was a simple GP margin concept. Then come to point number 7. Come to point number 7. Accounting treatment of depreciation. Of course, you have done depreciation accounting. The moment I will ask depreciation journal entry, you will say depreciation account debit to asset. Depreciation account debit to asset, which is going to be depreciated. My question to you all, what is the difference between depreciation account and provision for depreciation account? Have you heard about provision for depreciation? Have you used this term provision for depreciation? Provision for depreciation and accumulated depreciation are same. Sometimes institute book will use provision for depreciation. Sometimes ICAI book will use accumulated depreciation, but both are same. But what is the difference between? Means what is the difference between depreciation account and accumulated depreciation account? Accumulated depreciation account is also known as provision for depreciation account. However, More correct term is accumulated depreciation. But since ICAI is using provision for depreciation, we are also using provision for depreciation. We will not go against ICAI, correct now. But I will say once you become CA, you will be using only accumulated depreciation. You will not use provision for depreciation. Right now we are not discussing on that part. But have you listened this to account depreciation account and accumulated depreciation account? Yes, sir. So actually for depreciation accounting, they have given two ways of accounting. So write down. Depreciation will be accounted in the following two ways. Point number A, when accumulated depreciation account is not maintained, is not maintained, means will not maintain accumulated depreciation account, means you will not find accumulated depreciation account in your trial balance and balance sheet. So in that case, what journal entry will do? We'll say depreciation account debit to respective asset, means we used to call it fixed asset. However, I just want to inform you that now there is no such term fixed asset in our life. We'll call it property, plant and equipment. Well, what we'll call it? Property, plant and equipment. In short form, we call it PP. Once we start our accounting standard 10, accounting standard 10 says now we'll use the term property, plant and equipment. Now in our life, there is no such term fixed asset. Okay. But for the time being, because we have not started our CA enter, we can write down fixed asset. Okay. So depreciation account debit to fixed asset. So this is decrease in expense. It is decrease in asset. It is increase in expense. Increase in expense will be debited, and your decrease in asset will be credited. Okay, sir. Any doubt? Got this point? So increase in expense and decrease in asset. Modern rules. We are following modern rules only. Are you able to understand? In this, you can see we have not used accumulated depreciation account. Means if this is the case, what will be the effect in our account? For example, that down. If the cost price of property, plant and equipment (PP), better write down. You write down. Right now, you write down asset only. Cost price of asset is 10 lakh and useful life. You remember useful life of the asset is 10 years. So what is the depreciation? Depreciation is equal to 1 lakh. Depreciation is equal to 1 lakh. In this case, what journal entry you are doing? Depreciation to asset every year. Depreciation to asset every year. Correct? It means when you prepare your balance sheet, when you are preparing balance sheet, correct? So if you are preparing your balance sheet for year 1, so in this case, your fixed asset will be how much? Here is it 10 lakh minus 1 lakh, directly 9 lakh. Directly 9 lakh. This will come, correct? In the second year, your fixed asset will be how much? In the second year, your fixed asset will be 8 lakh. It's as simple as that. So every year you are passing one journal entry depreciation to asset, and your asset will got reduced by 1 lakh every year. So your asset account will get reduced by 1 lakh every year. It means I can show you by way of account also. Means if I am saying we are preparing the asset account, so suppose this is year 1, it is year 1 and it was purchased It was purchased on 1/4/2024. So on 1/4/2024 will pass one journal entry to bank. How much? It is 10 lakh. Correct now? So it is 10 lakh. Then at year end will pass one journal entry on 31st March 2025 by depreciation. By depreciation, how much? 1 lakh. So ultimately the closing balance of this asset is how much? 9 lakh. The closing balance is 9 lakh, and this 9 lakh will be shown in the balance sheet. This 9 lakh will be shown in the balance sheet. Again, you will do on 1/4/2025 to balance brought down. How much? 9 lakh. Again on 31st March 2026, you will say by depreciation. How much? 1 lakh. And ultimately on 31st March 2026, the closing balance will become 8 lakh. And this 8 lakh will be shown in your balance sheet. This is what a simple method, and I hope you remember this. No explanation required. Correct? Any doubt? No doubt. But second way of accounting depreciation is what? Write down point number B. Point number B. When accumulated depreciation account or provision for depreciation account, both are same. From exam point of view, both are same. However, practically I will say we use only accumulated depreciation account. Okay. When accumulated depreciation account is maintained, and this is actually as per AS10, means AS10 also require this. So if I will say as per accounting standard, which one is correct? So case number B is more correct, more appropriate from accounting standard point of view. So in this case, what will be our journal entry? The journal entry for depreciation will be depreciation account debit to accumulated depreciation. Means we'll accumulate depreciation every year in one account that will be known as accumulated depreciation account. Are you getting what I am saying? So we'll debit depreciation account but will not reduce asset account. Will accumulate the entire depreciation of every year in one special account that is known as accumulated depreciation account. So what journal entry we are doing? Depreciation account debit to accumulated depreciation account. Correct. Means in both journal entry you can say depreciation account has been debited. So in this first case also depreciation will be transferred to PL account. PL account debit to depreciation. PL account debit to depreciation. And in second case also you can see depreciation being a nominal account will be transferred to PL account. Means in this case also depreciation will be transferred to PL account, and we'll say PL account debit to depreciation. PL account debit to depreciation. Means what I want to say that accumulated depreciation is not a nominal account. Depreciation is a nominal account and that will be transferred to PL account, but accumulated depreciation is not a nominal account, so that will be shown by way of deduction from the asset in the balance sheet. So are you getting what I am saying? So this accumulated depreciation account will be shown in balance sheet, by way of deduction from asset account, correct? Got this point? Means in this case if I take the same example, let me take the same example and let us prepare asset account. So in this case if I prepare the asset account example, the same example, asset account, asset account. It was purchased on 1/4/2024 to bank. It is 10 lakh, and you can see depreciation. The depreciation will not be reduced from this because depreciation is accumulated in accumulated depreciation account, and therefore the closing balance 31st March 2025 by balance carried down will be 10 lakh only. 10 lakh. Okay, sir. Now coming to the next year on 1/4/2025, again we'll do two balance brought down. That will be 10 lakh. Once again, you can see depreciation is not deducted from this. It means it will maintain at the same cost price. It will maintain at same cost price 10 lakh. So in this case, what happened? The asset account is actually maintained at cost price. So in this case, asset account is maintained at cost price, but in this case asset account is maintained at WDB. WDB is written down value, or we can say carrying amount. Carrying amount is nothing but net book value. So I will use the word carrying amount, or you can add on WDB. WDB is nothing but carrying amount. We call it carrying amount. Carrying amount means at what amount it will be shown in the balance sheet. At what amount it will be carried in the balance sheet, that is carrying amount. Okay, so we will now start using this term carrying amount, because in accounting standard normally they use the word carrying amount. So whenever I say carrying amount means what amount will be shown in the balance sheet, at what amount it will be carried in the balance sheet, that will be WDB. So in the first way, in the first method, can I say asset account is maintained at WDB, but in the second method asset account is maintained at cost price, and for this purpose we'll have one more account, accumulated depreciation account. We will prepare accumulated depreciation account also. Accumulated depreciation account. Of course, you all have done this in your class 11, 12 or whatever, and also in CA foundation, but it is quite possible you have forgotten. So I'm just doing the revision for that. Okay. So here on 31st March 2025, you have done the first depreciation by depreciation of rupees 1 lakh. Correct. And this will be accumulated in this account. We will close it 31st March 2025. This will not be transferred to PL account. There is one depreciation account. Depreciation account is closed by transfer to PL account. So accumulated depreciation is not a nominal account. That I just want to inform you. Okay, sir. So this will be what? To balance carried down 1 lakh. Done. And then 1/4/2025 by balance brought down 1 lakh, and this will be 31st March 2026 to balance carried down 1 lakh. Understood? Understood? Are you able to understand? So accumulated depreciation is nothing but decrease in asset. So we normally say it is a valuation account for asset. So actually this is a valuation account for asset. Got this point? Have you understood? So here the rules will be reversed for the asset. So increase will be credited and decrease will be debited. So it is just like, we will not call it liability, because liability means obligation to pay. It is not a liability. It is shown by way of deduction from asset. It is not a liability. It is just a valuation account for the asset, and the rules will be reversed. Increase will be credited and decrease will be debited. So here increase, whenever depreciation we are adding, we are increasing it. So accumulated depreciation will be having a credit balance, because that is shown by way of deduction from asset account. Okay, sir. Means if I say in case of method 1 or method A, when you are preparing balance sheet, in balance sheet for year 1, Your asset will be how much? 9 lakh. For year 2, your asset will be how much? 8 lakh. This is the balance sheet. Balance sheet. Correct. Got this point. Now, if I say method number B, method number B, so in that case, your in year 1, your asset will be how much? You will say cost price is how much? 10 lakh. And from this you deduct accumulated depreciation of how much? 1 lakh. So it is 9 lakh only. Means ultimately the total in the balance sheet remains same, but the presentation differ. You can see here we are writing what is the cost price less accumulated depreciation, means we are just informing to the user what was the cost price and how much depreciation has been deducted from this. But in the first method, you are only writing WDB, means the user will not be able to understand what is the cost price, what is the depreciation till now has been charged from this. So for disclosure purpose, this is the better disclosure. I will say better presentation, and therefore AS10 accounting standard 10 correct now has given this presentation. Similarly, if I'll say year 2, so in year 2 what will happen? In year 2, can you see your cost price remains same, but now your accumulated depreciation will be how much? We will do less accumulated depreciation 2 lakh. Ultimately it is coming 8 lakh only. Means whether you are using method 1 or method 2, your balance sheet total remains same. Balance sheet total remains same for the first year and second year, only the presentation is different. Presentation different, so it means you need to understand when to pass this journal entry, when to pass this journal entry from examination point of view. You need to understand whether accumulated depreciation account is maintained or not. If it is maintained, then depreciation to accumulated depreciation. If it is not maintained, then depreciation to asset. That you need to understand. So that will be depending upon the information given the question. Information given in the question. Okay, sir. Chalega. However, this is more appropriate. So whenever question is silent at CA enter, will always pass this journal entry because this is more appropriate. So whenever question is silent, this is more appropriate method. This is more appropriate method. Appropriate method. Whenever question is silent, we should follow this. I think you have understood this also. Any doubt? So you have understood depreciation accounting also. Chalega. This was concept number 7. Now come to concept number 8, last one. Concept number 8, that is normal loss and abnormal loss. Normal and abnormal loss. Correct. Now there are two type of loss: normal loss, abnormal loss. So what is this? Normal loss is actually due to inherent nature of the goods. Suppose you are doing manufacturing, there will be some loss which is due to the nature of goods. For example, if you are using water for production purpose, so some water will evaporate. That is your normal loss. Correct. But if suppose some water, correct now, is wasted due to some other reason which is under your control, that is known as abnormal loss. There is some leakage, and because that is the water got wasted, can you see that is abnormal loss? So normal loss is due to inherent nature of goods, but if due to some accidental reason, due to some reason which is under your control but you are not able to control it, some loss happen, that is known as abnormal loss. So normal loss are recovered from customer, because this is going to happen. So what you will do, you will try to recover it from customer. But abnormal loss cannot be recovered from customer. Got this point? It means, can you say it will be included in the cost price of balance unit produced or acquired. Means either you are doing trading or manufacturing business. So if you are doing manufacturing, you are producing. So any normal loss, any cost of normal loss will be spread on the balance unit. Balance unit can be produced or it can be acquired. But abnormal loss cannot be included in the cost price of goods, correct now? Because it cannot be recovered. So it will not be included in the cost price of goods. Cost price of goods. Are you able to understand? It means this abnormal loss will be charged to profit and loss account as an expense. This will be charged to profit and loss account as an expense. Correct? This is the explanation part. Now let me explain you. Suppose this is your trading account. Trading account. And you purchase 10,000 kg at rupees 10 per each. So it is 1 lakh. Correct? Now out of these, there is a normal loss. There is a normal loss. 1 minute. Normal loss. Let's say 2000 kg. Let's say 2000 kg. If there is a normal loss of 2000 kg, actually it means you are purchasing 8000. Actually you are purchasing 8000 kg now. Because normal loss of 2000 kg was due to inherent nature of goods and you are knowing this much loss will happen. Means effectively you are purchasing 8000 kg. Correct? And you can sell 8000 kg only. And therefore, can you say, actually it means there is 8000 kg only. So therefore, the cost price per kg is not 10 rupees per kg. Is 1 lakh divided by 8000. That is rupees 125. That is rupees 125. It means just try to understand. If you want to find out sale price, you will add your profit margin. Add your profit margin in 10 rupees or 12.5 rupees. 12.5 rupees. Bolo. Are you getting what I am saying? So you purchase 10,000 kg and there is a normal loss of about 2,000 kg. It means effectively you are purchasing 8,000. So your cost per unit is not rupees 10. Your cost per unit is 12.5. And if you want to add profit margin, you will add profit margin not in 10. You will add profit margin in 12.5. It means suppose you want to earn a profit of 2.5 per kg. So your sale price is equal to 15 rupees. Your sale price is equal to 15 rupees and therefore you will try to recover normal loss from customer. Normal loss from customer. It means, can I say, in amount you are not doing anything. Only your cost price per unit will change and therefore there is no need to separate normal loss from purchase. Means now you effectively purchase 8,000 kg at rupees 1 lakh. So your total cost remains 1 lakh only, but your unit is worth 8,000 kg and you can sell. You will say buy, sale 8,000 into 15. 8,000 into 15 is equal to what? That is 1,20,000, and your profit will be how much? And you will say your profit will be equal to 20,000. It means for normal loss there is no need to pass any separate journal entry. So for normal loss we don't pass any separate journal entry. Why? Because the cost of normal loss is included in purchase and there is no need to separate it, because that will not be charged to profit and loss account. Got this point? It means normal loss, no need to pass, no need to record normal loss separately as cost price of normal loss is included in balance unit. Have you understood? Correct. This was a discussion about normal loss. Because I would have said normal loss no journal entry, but can you see, you should be able to understand why normal loss no journal entry, that I am explaining. Okay. So normal loss you understood. Now coming to abnormal loss. Point number B. And abnormal loss. Same example I am taking. Now same example I am taking. We are preparing trading account. And suppose you purchase 10,000 kg at rupees 10. That is 10 lakh. That is 1 lakh. Okay. Chalega. Now out of these, there is an abnormal loss of 2000 kg. Now abnormal loss of 2000 kg, it cannot be recovered from customer, means your cost price rupees 10 only. Your cost price is equal to 10. Are you getting? You can't spread the cost of abnormal loss in balance sheet because that is due to your inefficiency. So abnormal loss happened because of your mistake, your inefficiency. You can't recover it from customer. Means in this case, if you want to sell your goods, so you need to add your profit margin. Our profit margin was 2.5, so it will become 12.5. Now you have sold by sales. It is 8,000 because 8,000 kg can be sold. It can, then out of 10,000, 2,000 is lost now. So 8,000 into 12.5. So 8,000 into 12.5 is equal to 1 lakh. Correct. But it does not mean there is no profit. Are you getting? So here what we'll do? We'll first separate abnormal loss. We'll remove abnormal loss from purchase. So either you can do abnormal loss to purchase or you can say abnormal loss to trading account. Are you getting? Either you can reduce from purchase, abnormal loss to purchase. So what we'll do? Abnormal loss is how much? That is 8,000 into 10. Sorry, 2,000 into 10. So that is 20,000 is abnormal loss. And actually you have earned a profit. So your profit is what? 1 lakh is the sale price and 1 lakh minus 20,000. That is how much? 80,000. So 20,000 is GP. So your GP is what? 20,000. Are you getting what I am saying? And this abnormal loss which has been removed from purchase account, this will be your buy GP 20,000 and this abnormal loss will be charged to PL account. This abnormal loss will be charged to PL account. So you have removed it from trading account and you have charged it to PL account. That is the concept. Means you have done two journal entry. What is the first journal entry for abnormal loss? First journal entry, abnormal loss, account debit. I'm writing to purchase. You need to reduce your purchase and this abnormal loss will be charged to PL account. Then we'll say PL account debit to abnormal loss. You can see there are two journal entry for abnormal loss. First you remove it from trading account, then charge it to PL account. Then you have charged it to PL account. Okay, sir. Correct. Understood. Why I'm not using trading account? Because now in company SOPL format, statement of profit and format, there is no trading account. You need to reduce it from purchase and then you need to charge abnormal loss to trading, PL account. Got this point? Have you understood? I hope you have understood because it was a simple concept and I hope you were knowing about this. Normal loss, abnormal loss. Any doubt? So with this we completed all the basic concepts of CA foundation. What I think that it can be used in CA inter. There are many other concepts, of course, which you have done in CA foundation, which might be related to CA inter. But why I am not taking that concept? Because I know in CA inter, whenever I take some chapter, I will do that concept. Okay, sir. It does not mean that I want to ignore that. There are some more concepts which you might have done in CA foundation may be important for CA inter, but I know that that particular concept I will use in CA inter and I will explain that point in CA inter classes only. This much I hope you have understood. Now we can start our CA inter syllabus. So now from this moment we are starting our CA inter syllabus. Okay, are you ready for that? So what we'll do, we'll take a small break. After break, an early break today, and after break we'll start CA inter. CA inter. Advanced accounting. Okay, sir. We'll take a small break. Now, can we start once again, everyone? Yes, sir. So now we are going to start our advanced accounting paper, the first chapter. So, of course, what I have done, I have divided the entire syllabus into 5 parts. I have already said. So, what I have done, this accounting standard and a specific chapter, correct? So, there are 24 accounting standard. Effectively, there are actually 27, correct now. So out of that 27, 3 accounting standard will be covered in specific chapter. Got this point? So I'm not including right now that in accounting standard because that will be automatically covered in specific chapter. Okay. So what I have done, I have divided this 24 accounting standard in 3 parts. First, I will take 8 accounting standard. Then I will take 8 accounting standard. Then I will take 8 accounting standard. 8, 8, 8, 24. Correct. Now, once 8 accounting standard is completed, then I will take some specific chapters so that you are not you will not feel bored with accounting standard, because if I will continue to teach you only accounting standard, believe me, you will die. So what I will do, there are specific chapter, there are some problem solving chapters. So what we'll do, once 8 accounting standard is completed, I will take some few specific chapter. Then once again 8 accounting standard are completed, I will take some few specific chapter. Then at the end, again, I will complete 8 accounting standard. In this way, your entire syllabus will be completed. I have already said, yeah, I have divided your entire syllabus into 5 parts. So this is the 5 part. Okay. For each part, I will conduct some test. So you need to write down that test. Once that part is completed by me, revised by you. Completed by me does not mean you are ready for test. Revise it and write down the test. That will help you to understand whether you have understood the entire concept or not. Okay. So today, of course, we'll start with accounting standard. So there is one chapter. If you see the, if you have the AS Saran's book, in that there is one chapter number 1, and chapter number 1 start with, chapter number 1 is actually start with application of accounting standard introduction. So this is actually chapter number 1, the first topic in this introduction of accounting standard. This introduction of accounting standard right now I will not take. I will only give you the meaning of accounting standard, and I will proceed to each accounting standard. Got this point? Are you able to understand what I am saying? Why? Because this applicability, whatever I will say, that you will not be able to understand, because right now you don't know the entire accounting standard. Right now I will only teach you the meaning of accounting standard. Then I will proceed. Then what is the objective, what are the advantage, what are the disadvantage, then what is the applicability, means to whom it is applicable, to whom it is not applicable. Then we'll discuss at the end once the entire syllabus is completed. Right now it is not at all required. Okay, sir? Don't worry, I'll only come back to this chapter. It is my job. I will fulfill it. Right now, I will only give you the meaning of accounting standard. Already I said, accounting standard is a written policy document. Accounting standard is a accounting policy document issued by government. Issued by government, of course, with the help of ICAI only, with the help of Institute of Chartered Accountant of India. If you write down, with the help of ICAI. It is a policy document, accounting policy document. So what do you mean by accounting policy? Accounting policy means what? Accounting policy means accounting principle, And point number B, accounting method for preparation and presentation of financial statement. For preparation and presentation of financial statement. So what are our financial statement? When I say financial statement, what does it mean? The financial statement means point number A, balance sheet. Point number B, statement of profit and loss. Statement of profit and loss. Then point number C, cash flow statement. And point number D is notes to account. So whenever I say financial statement include all these four. Correct. Means if we are not presenting one out of these, that will be incomplete financial statement. So to make a complete financial statement, all these statements will be included in financial statement. So what do you mean by accounting standard? Accounting standard is an accounting policy document issued by government. Accounting policy means accounting principle and accounting method. Now, this accounting principle and accounting method deals with what? Madam? Means this accounting standard deals with what? So accounting standard AS deals with point number A, recognition of transactions and event. Transactions and event. How to recognize any transaction event. Point number B, measurement of transaction event. How to measure that transaction event, at what amount it should measure. Point number C, presentation of such transaction event. How to present that transaction in our financial statement. Point number D, disclosure of such transaction event. How to disclose that information in our financial statement. So accounting standard deals with recognition, measurement, presentation, disclosure. This is the objective of accounting standard. Correct. For example, our first accounting standard will be AS2, that deals with valuation inventory. So we need to understand how to recognize inventory, when to recognize inventory, what will be the measurement of inventory, how to present that inventory, and what are the disclosure requirement of that inventory. That AS2 will deal. Correct. Understood. And can I say, if there is no accounting standard, every entity will follow their own policy, and for that purpose the financial statement will be non-comparable and the basic objective accounting will be defeated, and therefore there was a need of accounting standard, which is now issued by government. Correct. Once again, this much introduction, this much only. Once you have understood this, now we can move to AS2. The balance part of the first unit of chapter number 1 will be discussed in the later part. Okay, sir? Yes, sir. Got this fine? Right now, we'll not discuss more about what introduction will come immediately to AS2, valuation of inventory. Valuation of inventory. Correct? So in the first part, what we'll do? We'll take accounting standard related to asset. Accounting standard related to asset means, if I will say accounting standard accounting standard are related to assets. We have AS2, write down for inventory. Then we have AS10, that is for PP, property, plant and equipment. Write down PP only, property, plant and equipment. Then we have AS26, intangible asset. Intangible assets. Then we have AS13 for investment. AS13 for investment. Then we have AS16, that is actually borrowing cost. Whether that borrowing cost means interest cost will be capitalized to the asset, it will be charged to PL. That will be discussed by AS16. Then we have AS12, government grant. Now government grant, sometimes when we purchase asset we receive grant. One doubt will come that what is the accounting treatment grant, that we will discuss in AS12. Okay sir. Then we have AS28, impairment of asset. Impairment of asset. Now what is the impairment we'll discuss, but right now just write down. I will not say what is impairment right now. Correct. You can see 1 2 3 4 5 6 7. Then we'll also discuss AS29, that is provision contingent liability and contingent assets. With this AS4, we'll discuss about AS4, that is actually event occurring after balance sheet date. So these are not related to what? Asset. AS29 is related to liability, and event occurring after balance sheet date is actually and one accounting standard which will help you to prepare financial statement. Correct now. So these two more accounting standard I will take in the first part. You can see now it become 1 2 3 4 5 6 7 8 9. So out of this AS28 I will not take right now. AS28 will be deferred. I will not take right now. That will be deferred. Okay, sir. So you can see now 1, 2, 3, 4, 5, 6, 7, 8. 8 accounting standard. First part will be completed. So our target will be this first part. So you need to revise in this part only. First part AS2, AS10, AS26, AS13, AS16, AS12, AS29, AS4. First part completed. How many part? 5 part. That will make your accounting standard what? Divided into part, and you will not feel what heavy in this particular subject. You will do part wise revision. Okay, sir? Chalega? Yes, sir. We'll start with AS2. Accounting standard 2. That is valuation of inventory. Now, when I say inventory, inventory means what? Now, the moment I say inventory, in your mind, the word will come stock. In your mind, the word will come stock, but believe me, stock does not mean inventory. Stock is not inventory. Stock is a wrong term given to inventory. I don't know from where it comes. The stock is a general term. What is the meaning of stock? Stock means group of any item. Group of any item is known as stock. Group of any item is known as stock. If I will say group of inventory, that becomes stock inventory. Actually, traditionally, from my point of view, they used to say stock of inventory, and from there the word comes closing stock and opening stock. But can you suppose, just try to understand, this is my classroom and there are many benches. The benches, for me, the benches is what? Inventory, or it is a fixed asset? It is a fixed asset, but I can say in this way, these are stock of benches. These are stock of benches, group of benches. So stock is a general term we use in our traditional accounting, trading and PL account. Whenever you used to prepare, we write on to opening stock, closing stock. Believe me, that is not a correct term. Now in financial statement, we write on inventory. We don't write stock. So from now onward, you are not supposed to use the term stock. You will be using inventory only. Now inventory or what? Now to understand inventory, we need to understand there are two type of organization. When I say any entity can be either trading organization, means either they are doing trading means they are non-manufacturing, and they can be manufacturing also. Manufacturing. So trading means what? They will purchase and sell. They will purchase from supplier and they will sell the same goods to what? Customer. Purchase and sale. They will are not in what? Production. Correct. So in this case, they will purchase whatever they purchase, that is known as stock in trade. Means whatever they purchase, that is known as stock in trade. We call it stock in trade. Okay, sir. Chalega. Now, what manufacturing will do? They are into production. So they will purchase whatever they will purchase, they will convert and they will produce what? Some item, and the item whatever is produced is sold. It means they are purchasing raw material. Raw material. They will purchase raw material. And then they will put into what? Production. Production started. Correct. And they will produce what? Finished goods. Whatever they produce for sale, that is finished goods. So whatever they produce, that is known as finished goods. Finished goods. Correct. So they purchase raw material and they put into what? Production. Now just try to production started and year end came until now production is not completed. So can you see that becomes semi-finished goods? So it is quite possible that production is incomplete. If the production is incomplete, then whatever left is known as semi-finished goods, and we call it what? WIP. So between these two, there can be WIP, work in progress also. They can be work in progress also. Means for manufacturing, there are three types of inventory: raw material, WIP, and finished goods. But for trading organization, it is what? Stock in trade. And can I say for trading, this is held for sale. Held for sale. This finished goods is also held for sale. Held for sale. This raw material is held for consumption. Held for consumption. Held for consumption where? In the production process. This is held for consumption. And this WIP is actually held in the process of production, means not yet completed. So this is held in production. And from this we'll understand the definition. I hope you have understood what I just want to say. So if suppose you are into manufacturing and you want to manufacture, suppose you want to manufacture this what? Calculator. So you will purchase what? Plastic and other parts of this calculator, whatever is required. I don't know. I am not into the manufacturing. I'm just taking one example. You will purchase plastic, and then you also purchase some other raw material which may be required for production of this calculator. So once that purchase, that become purchase of raw material. Then you start converting it. You will start production process. Correct now. And once the production completed, calculator is produced. This calculator become finished good. That is held for sale in the what? Held for sale. Got this point? Yes, sir. Now let's come to the definition. You can see meaning of inventory. Meaning of inventory. So all the definition, all the content is given in my AS Saran's book. Believe me, this has been summarized in such a way that it will help you to revise the entire concept just before exam. So I will read from this. Whatever I am writing in AS Saran's book, you also write down. And whatever I am writing in my class note, that also you write down. Both are important. Both are important. Okay. So what is the meaning of inventory? Inventories are asset. Inventories are asset. Of course, inventories are asset. I already said that we are doing accounting standard related to asset. Now, what is the meaning of asset? In the last class, I have given you the meaning of asset. Do you remember? Asset means any resource which are under the control of the entity and which provide future economic benefit. Then only it is an asset. Correct now. It means to become inventory, first you should meet the definition of asset. Now, whenever I say asset, asset means what? Asset means what? Control and what? Future economic benefit. FEB means what? That are future economic benefit. These two conditions need to be satisfied, then only it will be the definition of asset. So control and future economic benefit. So inventories are assets which are held for sale in ordinary course of business. Ordinary course of business. Ordinary means what? In routine course of business. In routine course of business. Can I say everyone knows their business? If I am saying what is my business? To take classes for CA Inter and CA Final. And can I say for taking my classes, I may have some study material which might held for sale. So that is held for sale in my ordinary course of business. Because I am teaching what? Advanced accounting classes. So I have some study material. Correct now. That is held for sale in my ordinary course of business. Correct. But I have also camera. And just try to understand, I am using this camera to record my classes. I am using this camera for recording the classes. Whether that is held for sale, that is not held for sale. Even though, can I say, suppose this camera is no more required and I purchase another camera, so the first camera, the old camera might be held for sale, but that is not my ordinary course of business because I am not engaged in the business of purchase and sale of camera. Got this point? So I am into coaching classes. I teach advanced accounting and financial reporting, advanced accounting CA Inter and financial reporting CA Final. This camera is not held for sale in my business. Got this point? And therefore this camera is not an inventory. This camera is not an inventory. Got this point? So inventories are assets which are held for sale in ordinary course of business. Held for sale in ordinary course of business. So can I say for manufacturing and for non-manufacturing? For manufacturing, it will be what? Finished goods. For non-manufacturing, it will be stock in trade. Correct. So inventories are assets which are held for sale in the ordinary course of business and held in the process of production. Held in the process of production means production started but not yet completed. So that is nothing but WIP. So this will be WIP in case of manufacturing. Correct. And held in the form of material or supplies. Material supplies. Correct. Material supplies to be consumed in the process of production. To be consumed in the process of production or for rendering of services. So that are known as raw material. That are known as raw material. Correct. So held in the form of material or supplies to be consumed in the process of production or for rendering of services. So services. Just try to understand. Right now I am engaged in the service business only because I am giving services to you. So for me right now, for the mic, I have some battery. So I have some stock of batteries. Correct? Are you getting? I'll just show you. Where is the stock of battery? I have the battery. I am using mic. And for mic, I have batteries. You can see this is the battery. There are some other battery also I have. I don't know where it is kept. But there are some stock of battery. So I will not purchase battery whenever required. These are the stock of battery. And every time whenever the battery is no more in the usable condition, I'll change it and replace with new battery. Correct now? So these are the battery which are held for consumption in the process of rendering of services. Therefore, this is my inventory only. This is my inventory. For service organization also it is my inventory. Okay, sir. Got this point. Can you repeat with me once? Inventories are assets which are held for sale in the ordinary course of business, held in the process of production, held in the form of material or supplies to be consumed in the process of production or for rendering of services. Okay, sir. Correct. Now, just try to understand. If I say, try to understand what I am saying. When I say material, there are two type of material. One is known as direct material. One is known as indirect material. Direct material means what? In simple word, because the detailed discussion about this material will be done in your costing subject. If you have done costing, you might be knowing about direct and indirect material. If you have not done costing, nothing to worry about that. You will be expert in this particular term when your costing will start. Right now, I am just giving examples of direct and indirect material. You will be able to understand and you will feel whatever I am doing, that whatever I am saying, that is correct also. Just try. Are you getting what I am saying? So if I am to manufacture this calculator, I said I need to purchase plastic, and plastic, you can say it is visible, or any parts whatever is inside this calculator, that all are direct material. Okay, means whatever is actually attributable directly to this calculator is what? Direct material. In simple word, whatever can be seen in this particular calculator is direct. After opening, whatever is seen, that is also what? Direct. But just try to understand, for this plastic we need to mold it. For that, fire is required, and to generate fire we purchase some coal. So coal is also raw material. Coal is also material that is purchased to generate what? Fire. To generate fire. But can you see the coal? But coal is also required for production activity or not? Yes. But that is indirectly attributable. So that coal become what? Indirect material. That coal become indirect material. Okay, sir. The direct material, of course, it is inventory. No doubt about that. It is inventory, and AS2 will be applied. Doubt will come about indirect material. Now there are two type of indirect material. Just try to understand. One is which are used for production. One is used for production. One is used for distribution. Used for distribution. Are you getting? I'll just give one simple example so that you can understand. If we started producing this calculator, just try to understand, can you sell this calculator without packaging? No, you can't sell this particular item without packaging. So there is one primary packing. There is one primary packing. There will be one box, we'll pack it, and then it will be ready for sale. Correct? So that is known as primary packing. Then once the packaging has been done, once the primary packaging done, then it will be distributed to the customer. And for distribution to wholesaler or whatever, can I say, you will put each unit of calculator in a carton. That carton is a secondary packaging, but that carton is required for distribution or production. That carton is required for distribution. Are you getting what I am saying? So there is one primary packaging, there is one secondary packaging. It is a primary packaging is required for production, because without that it is not ready for sale. It is not ready for sale. But once it is ready for sale, for distribution to the customer, it can be wholesaler, it can be retailer. You want some cotton, the cotton become what? Secondary packaging. Are you getting what I am saying? Correct. So what I just want to say, if I am saying primary packaging, primary packing, and there is one secondary packing. Secondary packing. Got this point? My question to you all, just try to understand, because now you have read the definition. Once again, I am reading the definition on your behalf, and why there is an importance of definition, that I just want to inform you that once you understand definition, then only you can relate with the example. So you can't say it is inventory, it is not an inventory without knowing the definition. So I am just explaining with definition so that you can understand what is the important definition. From initial classes, and you started give, and you need to give importance of definition also. Got this point? Yes, sir. Once again, I am reading on your behalf. Inventories are assets which are held for sale in ordinary course of business, held in the process of production, held in the form of material or supplies to be consumed in the process of production. To be consumed in the process of production. So no doubt about direct material, it is held for consumption in the process of production. This is inventory AS to will apply. My question to you all, everyone, whoever is listening, indirect material, whether it will be inventory or not. This indirect material are of two types: used for production, used for distribution. From your point of view, you say the primary packaging, whether it is inventory, it is not inventory. Inventory, because this is used for production. Anything held for consumption in the production process will be inventory. Therefore, this will be also considered as inventory. Inventory, and AS2 will be applied. But any item which is held for distribution is not inventory, because this is not held for consumption in the process of production. This is held for consumption in the process of distribution. Therefore, it is not an inventory. Not an inventory. And AS2 is not applicable. AS2 is not applicable. Got this point? Have you understood this point? Are you able to understand? So what I just want to say, material can be direct, indirect. Now what is direct, what is indirect? Detailed discussion will be done where? For detailed discussion. Tora to I hope you have understood. Detailed discussion by your costing faculty. Costing faculty. Okay, sir. Chalega. Bolo. Any doubt? Let us once again come to the definition. So can you just once again repeat with me? Inventories are assets which are held for sale in the ordinary course of business. So what is ordinary course? Once again, just try to understand right now whatever I have said, you have understood. Whatever is related to a business, that is ordinary course. Whatever is related to business, that is ordinary course. For example, we have purchased one equity shares. I purchased one equity shares. But can I say purchase of equity shares is not my business? So if I am selling it, that is not my ordinary course of business. That is not my ordinary course of business. So can I say in this way that is not inventory? That is not inventory. Correct? But one of the question was asked in exam, not in exam. Actually, that question was asked in CA final exam. And recently, similar question was given in the CA Inter RTP. From my point of view, that type of questions should not be asked in CA Inter exam. But if they have given in RTP, quite possible they may ask in your exam also. I am taking that question. Okay. Let us understand from that question what is the meaning of ordinary course of business. What is the meaning of ordinary course of business? Come to that question. Come to question number 19. Question 19. Night Limited sells beer to the customer. Sells beer. You know beer? Sir, what you are using? Beer. Just try to understand. This is an example. You need to understand. Night Limited sells beer. Beer. Correct? It is alcohol. Beer to the customer. Some of the customer consume the beer in the bar. You know bar? Night Limited bar. The question is totally related. Beer in the bar run by Night Limited. Of course, customer will consume the beer in the bar only. While leaving the bar, the consumer have leave the empty bottle. The consumer leave the empty bottle in the bar. Oh, in the bar and the company take the possession of this empty bottle. Possession of this empty bottle. Big consumer leave the empty bottle in the bar. Who will take in the home? They do not have that much what? They can't take in the home. Everyone knows. So of course they will leave the empty bottle in the bar only. And the entire position of that bar was taken by the company Night Limited. The company has laid down a detailed internal record procedure for the accounting of these empty bottle which are sold by the company by calling for the tender. Now from this it is understood detailed internal record procedure for accounting. It means the value of this empty bottle is not immaterial, it is material. From that we have understood it is material. So what do you mean by material? Material means anything, any information which is useful for the user of financial statement that become material. Means the value of this empty bottle is not insignificant, it is significant. Correct? Means we can't ignore it. We can't ignore it. So accounting need to be done. For accounting, we need to understand whether which accounting standard will be applied. That we need to understand. Yes, sir. So the company has laid down a detailed internal record procedure for accounting of these empty bottle, which are sold by the company by calling for tender. Means what company is to do? They will call tender at the end of each month, and that is actually held for sale by calling tender. Held for sale. Now you need to understand whether it is held for sale in the ordinary course of business or not in ordinary course of business. That we need to understand. Keeping this in view, decide whether stock of empty bottle is an asset, because they have used the word stock of empty bottle. It does not mean it is inventory. It may or may not be inventory. The stock of empty bottle, first whether it is an asset. So they have asked two questions. Whether it is an asset. If it is not an asset, the question of inventory will not arise. But if it is an asset, it may be inventory also. Then if so, whether stock of empty bottle existing as on balance sheet date is to be considered as inventory of the company and valued as per AS2, or to be treated as a scrap and sold at realizable value with corresponding credit to other income. Means simple, what they ask in two questions: whether it is an asset, if yes, whether it is inventory, what is your answer? So first you need to answer whether it is an asset. Asset definition I have already given. Definition already I have given. Let me explain what actually happened. We are doing question 19. We are doing question number 19. It is Night Limited. This is customer. Night Limited has sold beer with bottle now. With bottle. Means now who is the owner of this bottle? Means beer and bottle. So can you say now customer become owner of bottle, but this customer will leave the empty bottle in bar, and the entire position is taken by company. Means now it is under the control of Night Limited. It means even though empty bottle is not owned by Night Limited, but it is under the control of what? Night Limited, because in the morning the customer will not come for empty bottle. They will not demand, sir, please give me my empty bottle. It is impossible. Even though they come, Night Limited will say, I don't know. Correct. It is under the position, it is under the control of what? Night Limited. I hope you are understanding. It means now control is with whom? With company. So my question to you are, this empty bottle is an asset or not? Yes, empty bottle become now empty bottle is an asset of what? Night Limited. Why? Because two conditions. What are the two conditions? Because of course control is with whom? Night limited. And who will derive future economic benefit? Future economic benefit means future economic benefit. It can be sold by night limited. Of course, it means night limited can derive future economic benefit by same. So both the conditions are satisfied, and therefore it is an asset of night limited. I hope you understood. Such a good question. This type of question, from my point of view, should not be asked at CA Inter level, but they have given in the RTP of CA Inter. So quite possible this question can be asked. But initially, I have taken this question to inform you that this type of question is actually will be asked in accounting standard. For that, you require conceptual knowledge. Conceptual knowledge. So I am giving you that concept. I am trying to give that concept. Okay, sir. Bolo. The second question they have asked that you will answer. Whether this empty bottle, which is an asset for the company, whether it meet the definition of inventory, bolo yes or no. Whether it is held for sale, of course it is held for sale. Whether it is in ordinary course of business, ordinary course, what I say, routine course. And can you say normally it happens? Normally it happens. Every time customer will come, they will leave the empty bottle, they will take the position and they will call the tender, and that is held for sale in the ordinary course of business. It means this is related to business only. This is related to business. Why it happened? Because they are selling what beer. Now they have the position of empty bottle. It means it is held for sale in ordinary course of business. You can't say it is not related to business. It is related to business. So just write down. Empty bottle is held for sale in ordinary course of business. Therefore, it will be classified as inventory. Therefore, classified as inventory. Correct. Now just try to understand, if in your exam solution you are writing it is an asset, inventory, they are not going to give you marks till your explanation is correct. Means CA inter or CA final exam you get marks for what? Not for correct answer. Your answer might be correct, but your explanation should be as per ICAI requirement. So you need to give best answer, then only they will give you marks. Otherwise, they are not going to give you marks. Understood? But have you understood? If you understood the definition, you can write down. If you have understood the definition, you can write down. So ordinary means it is a part of routine business. Ordinary means what? Write down. Ordinary means, write down, which are related to business. Which are related to business. However, AS5 has defined ordinary activities. Right now, we are not doing AS5. When we will do AS5, we will better understand what is the meaning of ordinary activities. Let us refer AS5. For better understanding, refer AS5. Okay, sir. Now you have understood the meaning of inventory. So I have taken my time. You can see I have given almost 20 minutes in the definition of inventory only. I have given almost 20 minutes in the definition of inventory because I just want to inform you what is the importance of inventory in chartered accountant life. Got this point? Yes, sir. Now we are okay with inventory. Now we'll come to the second part, that is valuation of inventory on reporting date. Reporting date means what? Balance sheet date. When I say reporting date, it means balance sheet date. Balance sheet date means 31st March. Of course, in India, all the financial statement is prepared as on 31st March. So balance sheet date is 31st March. But from examination point of view, it can be year end, it can be 31st 12 also. So that you need to understand what is your balance sheet date. So valuation is done on what? Balance sheet date. Normally what happens? Whenever we acquire any asset, whenever we acquire any asset, we do initial recognition, then we do subsequent recognition. Initial recognition means on the date of acquisition. Subsequent recognition means on reporting date. Normally, all assets, as per any accounting standard, are initially measured at cost price. Initially, so whenever you acquired it, initially measured at cost price, and subsequently on 31st March, what our years to say that inventory will valued at lower of point number A, cost price, and point number B, net realizable value, NRV. This you know, cost price NRV which is lower, correct? And I understood that, you have understood that this is as per what? Which concept? As per conservatism. As per conservatism. So if your cost price is 100, NRV is 90, then can I say you will value at what? 90. So what is the value of such inventory on reporting that is 90? And out of these, what is your loss? Loss is equal to rupees 10. So we say inventory is written down to its NRV. So this is known as inventory is written down by rupees 10 to its NRV. So when I say written down means the loss, and that loss will be charged to PL account. This is what your subsequent recognition. So this measurement, whatever we are doing, that is on reporting date. So as per AS2, inventory is valued at lower of cost price NRV. Very simple, nothing to say, nothing to discuss. But now we need to understand what is included in cost price and what is not included in cost price. So first we need to understand how to calculate, how to determine cost price. Correct. Then we need to understand how to measure NRV. So there are 2 points that we need to understand: how to measure cost price, how to measure NRV. For that we are going to discuss. The next part. Okay, sir. Now coming to cost price. What is cost price? Now we are discussing about component of cost price. Correct. Once again, the discussion will be for manufacturing and non-manufacturing. First we'll do non-manufacturing, that is very easy. Once again, when I say non-manufacturing, it is purchase of stock in trade and then sale of stock in trade. Means whatever you are purchasing, correct, the cost of that purchasing will become cost price. Means cost of acquiring that stock in trade will become what? The cost price. So we need to understand how to calculate that cost price. So for stock in trade, cost of purchase means invoice price. Invoice price means any price whatever is mentioned in the invoice. So that is invoice price will be given the question. Then we'll do less any trade discount or any rebate. Trade discount or rebate will be deducted to reduce trade discount or rebate. Then we'll add any non-refundable duties and taxes, means any taxes which are non-refundable. Correct now, that is a part of cost and that will be added. Correct. I will explain, but first I am reading what will be added, what will be deducted. So invoice price minus trade discount or rebate plus non-refundable duties and taxes. After that you need to add all the costs directly attributable to bring the inventory in the present location. Whatever cost incurred to bring the inventory in present location means from where you are doing sale, to bring the inventory in that location, whatever cost incurred that will be added. This will become the cost price of stock in trade. Once again, let me explain. Invoice price you have understood, minus trade discount. Now what is the difference between trade discount and cash discount. One thing you have understood from this particular formula, that cash discount will not be deducted, only trade discount will be deducted. So what is the difference between trade discount and cash discount? Just try to understand. Any discount given on trade date of whatever nature, that is trade discount. Means that is known at the time of transaction. This is a discount given. So any discount given on trade date is what? Trade discount. And any discount which is given on settlement date. Settlement date means once you will pay the amount, that time whatever discount you receive, that is what cash discount. Means cash discount is not known at the time of purchase. Therefore you can't deduct it. Therefore you can't deduct it. So deduct trade discount. Don't deduct cash discount. Cash discount is also known as settlement discount. Normally cash discount is in case of credit transaction. In case of credit transaction, correct? So if you are doing cash transaction, means if you are doing cash purchase and any discount received on trade date, that is also trade discount. That is also trade discount. Got this point? Are you able to, in simple word, can you see, if I am giving discount on trade date, it means that discount is given to all. So actually the cost price are getting, means, just try to understand, if I purchase any item at rupees 1000 and I have been given a discount of 100, means actually my cost is 900 only. My cost is 900 now, correct now. So this is actually on acquisition date. Now after 30 days, I have done the payment. And I received some more discount due to early payment. Due to the reason that I have done settlement before due date, correct? The vendor has given some additional discount of rupees 50, but that was not given to everyone. That is only for me. Means my cost was 900 and this become income and this will be transferred to my PL account. So only trade discount is deducted. Cash discount is not deducted. Settlement discount is not deducted. Cash discount is not deducted. Understood? Now, what is the difference between discount and rebate? Means discount and rebate, from accounting point of view, trade discount, rebate are same. From accounting point of view, but you need to understand when a discount will become trade discount, when a discount will become rebate. Just try to understand, on trade date, if any discount is given to everyone, that is trade discount. But if any discount is given to some customer on fulfillment of certain condition, that become rebate. So rebate is not given to all customer, but that is given on trade date. So can you say that need to be also deducted from what? Invoice price. For example, if you are purchasing 1000 kg in bulk quantity, some more discount will be given on trade date. It means that is big volume discount, and volume discount will become rebate. So any discount which is given to all customer, that is trade discount. Any discount which is given to only specific customer on trade date, that is rebate. But anything given, any discount, any rebate given on trade date will be deducted from invoice price. Understood? Correct. Now coming to non-refundable duties and taxes. When I say non-refundable duties and taxes, so right now we are discussing about indirect tax. We are not discussing about direct tax. Do you know about direct tax and indirect tax? Yes, sir, we know. Direct tax means income tax. Indirect tax, right now I will discuss only about GST. So it means we are discussing about GST. Goods and service tax. We are not discussing about income tax. We are discussing about GST. Can you see you have one more paper, tax paper? In that once again, detailed discussion will be done by detailed discussion of GST and income tax will be done. Right now I am here to teach you accounting. I will not say anything about GST and income tax. Correct? Now GST, just try to understand, when you purchase, you are paid GST and that is recoverable from government. If it is recoverable, if it is refundable by the government, it means it is not your cost. And if it is not recoverable by the government authorities, it is a part of cost. And therefore, if it is non-refundable, you should add it. But if it is recoverable by government, authorities, it is what? Not a part of cost. Do not add it. Are you getting what I am saying? So only the non-refundable duties and taxes. Okay. When you learn GST, your teacher will say that for GST, input credit is available. We call it input tax credit, ITC. We call it ITC. So if the ITC is available, means it is refundable. If ITC is not available, it is non-refundable. Means in the question if it is given input credit is available, it become refundable, then don't add it. If it is given input credit is not available, it is non-refundable, then add it. It means, can I say in this way? Non-refundable means input credit of GST is not available. We can say in this way. Input credit of GST is not available. If the question says input credit is available, then it become refundable, then don't add it. Okay, sir. Invoice price, less trade discount or rebate, add non-refundable duties and taxes and other costs directly attributable to bring the inventory in present location. Of course, can I say in Bachpan se you have done in trading account, all the direct expenses are added. All the direct expenses are added. This direct expenses are nothing but this. Means carries in what? Loading and unloading charges. Any tax paid at a time of entering into one state from another state, means octroi or toll tax, whatever you can say. Any insurance in transit, any commission paid on purchase, whatever expenses you have incurred to bring the inventory in present location, that will all be added. Means example, if you want to write down, can you write down examples of this? What? Carriage inward, loading and unloading charges, insurance in transit. I am saying insurance in transit, not of premises. Insurance in transit. Then what? Any commission on purchase. Commission of purchase, any toll tax, whatever. So whatever you have paid to bring the inventory in your location will be added. Correct? And we call it what? We call it all the direct expenses. These are nothing but direct expenses. Are you able to understand? You can say these are not but nothing but direct expenses. These are direct expenses. Are you able to understand? Any doubt? So this become cost price of inventory. This become cost price of inventory. Any doubt? No doubt. Understood? Correct. And from the Bachpan se, you know one point, that trade discount will not be recorded, cash discount will be recorded. Why cash discount recorded? Because that is not deducted from what? Invoice price. Trade discount deducted, therefore there is no need to record it. There is no need to record it. Okay, sir. I think done. Means, let me take one example. Let one example. You are preparing one trading account. You are preparing one trading account. I'm just explaining with this. Okay. Now you have done two purchase. You have purchased 1000 kg. 1000 kg at rupees 10. So that become 1 lakh. From this trade discount TD at 10%. So 10,000 minus, and suppose GST. Suppose credit is not available. Suppose credit is not available. So you'll add it. So add 18%. 18% suppose. So 90,000 into 18% is equal to 16,200. Correct. What is this? So 1 lakh minus 10,000 plus 16,200. It is 1 lakh 6,200. Then you have incurred some transportation expenses, carriage inward. Carriage inward. Let's say 10,000. Then there is some loading and unloading. Unloading correct? That is 3,800. There may be some other direct expenses to bring the inventory. There may be other direct expenses, commission on purchase, etc. Okay, let's say 20,000. Are you getting what I am saying? This is the trading account. And can I say we used to prepare trading account like this? And you can see this is purchase. When I say purchase account, the purchase account we used to debit by this amount. Correct? So this is purchase account. So normally when I say invoice price minus trade discount rebate plus non-refundable duties and taxes, that is your purchase account. Then we used to open one carriage inward account. Then this is nothing but wages. You used to write down wages in your trading account. That is nothing but loading and unloading charges paid to labor. That is nothing but wages. Then any other direct expense, whatever name. This is what your correct. Means what is the cost price per unit? So what is the cost price per unit? Check karo. So 1,06,200 plus 10,000 plus 3,800 plus 20,000. It is 1,40,000. So I will say what is the cost price per unit is 1,40,000. 1,40,000. Divide by what? Divide by 10,000. It means it is how much? Sorry, divide by I have written 1,000. This 10,000 kg. 10,000 into 10. Make it 10,000. 10,000 kg. Okay. So divide by 10,000. So it will become how much? 14 rupees per kg. 14 rupees per kg. Now can you say if you want to find out sale price, you will add profit margin to 40 rupees only. Let's say sale price per unit is equal to 14 plus 6 is equal to 20. Now out of this 10,000 kg, suppose you have sold 8,000 kg. So you have sold 8,000 kg to write down by sales 8,000 into what? 20, because you want to sell at what? 20. So 8,000 into 20, how much? 1,60,000. Now can you say your profit margin is what? Your profit margin is 6. So you can directly calculate your gross profit. Can you say gross profit will be 8,000 into 6? 8,000 into 6, how much? Your gross profit is equal to 8,000 into 6. How much? So 8,000 into 6 is equal to 48,000. This is your gross profit. Correct? Means can you say the balancing figure of this account will be closing stock? The balancing figure of this account will be closing stock. Closing stock means inventory. Now we'll call it inventory. We'll call it inventory. Inventory of stock in trade. But how to measure this? That is only why we are here to understand. He will say your closing stock, how much left? 2,000. And 2,000, what is the cost price per unit? That is 14. We are here to understand this 14. Till CA Foundation, they used to give you the amount of closing stock. Now here we are understanding how to find out the cost price of closing stock. Means in CA Inter, means as a chartered accountant, you should know how to determine that cost price of closing stock, means inventory. Got this point? So we'll say it is 2,000 into 14. That is how much? 28,000. That is how much? 28,000. I hope you are understanding whatever I am saying. Chalega. Correct. Now you just match it. It will 1,60,000 plus 28,000 minus 1,06,200 minus 10,000 minus 3,800 minus 20,000. What happened? One lakh 60 plus 28,000 minus 1,06,200 minus 10,000 minus 3,800 minus 20,000. Exactly 48,000 coming. Actually, I have done one mistake when I was calculating. Therefore, I was surprised why the answer was not coming. So 48,000. So in your CA foundation, what was given? CA foundation, this was given, 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 and used to find out gross profit. Now in AS2, we need to calculate these. We are here to understand this through AS2. This is the objective of accounting standard 2. And can I say CA, you should know how to measure inventory. What is included in the cost price of inventory, that we are here to understand. At this point, inventory chalega. So I'm just teaching you as per CA foundation concept so that you can link what you have done in CA foundation and what you are supposed to do in CA inter. Now, I think you have understood this. You have understood for stock in trade means you have understood for non-manufacturing organization. This is non-manufacturing organization. Now let us come to manufacturing. So now we are discussing about manufacturing organization. Before that, I need to give you some idea of costing. Now, whenever we say manufacturing, so manufacturing means cost price. Now, as per your costing subject, I am not teaching you costing subject. Costing subject will be taught by whom? Your costing faculty. There are two types of cost. I am saying costing, not accounting. And I am discussing about cost, not expense. Cost and expense are two different terms. Cost and expense are two different terms. Expense is the wider term. Cost is a part of expense. Got this point? Correct. So manufacturing means cost. Cost means costing subject. Now, as per your costing subject, your cost means manufacturing cost. We are discussing about manufacturing cost. We are discussing about manufacturing cost. Your manufacturing costs are two types. One is known as direct. One is known as indirect. Now, direct means there can be three types of direct costs. One is direct material. One is direct labor. One is direct manufacturing cost. Correct? Similarly, indirect costs are of three types. It is indirect, material, indirect labor, indirect manufacturing cost. Are you getting? So because you have not heard about this term, I am saying if you have done costing subject, I think you are able to relate with me. But if you have not done costing subject, you will not be able to relate. Therefore, I am saying manufacturing cost as per costing subject. Right now, I am not saying expense. Expense is a wide term. Cost is what? A part of expense. Got this point? The cost are of two types. One is direct, one is indirect. In your costing subject, direct means direct material, direct labor, direct manufacturing cost. Indirect material, indirect labor, indirect manufacturing cost will consist of indirect. Okay. Now, already I have given one example of direct material and indirect material. Already I have given one example. I have already said plastic for calculator, then packing material for primary packing is an example of indirect material. Okay. Now, let me give you one example of indirect labor and direct labor. Means any labor which is engaged in production, directly engaged in production, that is direct. For example, right now, I am also producing my recorded classes. So, my labor cost is direct. I am also labor. Right now, I am labor because I am engaged in producing my recorded classes. It means whatever payment I will receive, that is what direct labor. Correct? Are you getting what I am saying? But there will be some technical person. There are many technical person. After recording, they will just see whether everything is okay or not. So they are indirect labor. They are indirect labor. Means in a factory, there will be some storekeeper. The storekeeper is not engaged directly in production purpose, but they are required for counting the stock. They are actually indirect labor. So whatever you are paying to them, that is also required for manufacturing, and that is known as indirect labor. Understood? The detailed discussion in costing subject, that is not required right now. Now whatever I will discuss, that will waste our time. I'm not teaching you costing now. Now this indirect cost is known as production overhead. We call it production overhead. Correct? Now production overhead are of two types. One is variable, one is fixed. Overhead we'll call it प्यार से OH. Variable overhead and fixed overhead. Correct? The variable overhead which vary according to the production. It is as simple as, if you increase the production, variable production will increase. If you decrease the production, your variable production will decrease, but fixed overhead will remain constant irrespective of production. For example, factory rent. Factory rent need to be paid irrespective of production. Means if the production is 1000, then also you need to pay the same rent. If the production is 10,000, then also you need to pay the same rent. Therefore, factory rent will become one example of fixed overhead. But if I will say consumable used for production, can I say consumable will vary according to production. More quantity, more consumable. Less quantity, less consumable. Correct? That will be an example of variable overhead. That will be an example of variable overhead. Understood? Correct? So we'll say direct material, direct labor, direct manufacturing cost, indirect material, indirect labor, indirect manufacturing cost. And to sum total of this indirect will be known as production overhead. Means in accounting, we'll call it production overhead. So whenever I am saying production overhead, it is sum total of indirect material, indirect labor, indirect cost. Indirect cost. Have you understood this much? If you have understood this much, now we can go to find out cost price of finished goods. Now whenever I say cost price of finished goods, so first we need to purchase raw material. So first we need to find out cost price of raw material. This we need to find out. Then this will be converted into what? Finished good. Then in this we'll add conversion cost. Conversion cost. Now conversion cost consists of direct labor, and production overhead. This will add, and once the production completed, there will be some other cost to bring the inventory in condition of sale. For example, primary packaging. Without that, sale is not possible. So there are some other costs which will be also added. Other costs to bring the inventory in condition of sale. So in this total, this become the cost price of finished goods. Cost price of finished goods. Understood? So whenever you want to find out cost price of finished goods, first you need to find out cost price of raw material. Cost price of raw material. In that you need to add conversion cost and other costs, that will become cost price of finished goods. What I just want to say, that cost price of finished goods, first we need to find out cost price of raw material. Means cost of purchase of raw material, because you are purchasing raw material. So in this there are three components: first, second, and third. So there are three components of the cost price of finished good. One is the cost of purchase, then other is what? Conversion cost, and then what? Other cost. There are three component of cost price. First, cost of purchase. Whenever I say cost of purchase, that will be raw material. It is as simple as whatever we have done for stock in trade. Same thing is given. So cost of purchase of raw material will be invoice price less trade discount rebate plus non-refundable duties and taxes plus other costs to bring the inventory in present location. Everything will be added. This will become the cost price of raw material. I think no explanation required for the cost price of raw material. It is as simple as whatever we have done for stock in trade. I hope you understood this. correct? In this will add cost of conversion. So direct labor cost. Direct labor cost means what? Manufacturing wages. Manufacturing wages. So whatever is given, that will add. Direct labor, nothing to explain. Labor cost, whatever you are paid to the labor for production activity, that you need to add. Then in this will add production overhead. Now production overhead are two types. This explanation required. Production overhead are of two types. One is known as variable overhead, other is fixed overhead. Now the question is that how to allocate variable overhead and fixed overhead to the cost price of finished good, that we need to discuss. So this discussion required, but you have understood that variable overhead and fixed overhead will be added. That is known as production overhead. Once you have added these, then you add other costs. So what is the meaning of other cost? Any cost which is incurred to bring the inventory in present location and condition for sale will be also added, correct? So other costs are included in the cost of inventory only to the extent that they are incurred in bringing the inventory to their present location and condition for sale. For example, packaging cost. Production completed, calculator produced, but without primary packaging, it is not ready for sale. Therefore, primary packaging is also required. That will be also added to find out the cost price of finished goods, correct? Suppose production completed, packaging done, it is ready for sale. But can is for sale? It need to be transferred from factory to warehouse. From factory to warehouse, now the transportation need to be done. So that is also what required to bring the inventory in condition of sale, and therefore that will be also added. That will be also added. Or quite possible after production once completed, some modification might be required as per the specification given by the customer. Some customer requires some modification. So whatever modification you are doing, correct now, in the in the production which has been completed, that will be also added. That will be also added. Got this point? Yes, sir. So for example, packaging cost, transportation cost from factory to warehouse, modifications cost, all will be added, and this sum total will be the cost price of finished goods. This will be the cost price of finished goods. I'm here to explain variable and fixed overhead. First, say me whether you have understood all the items or not. First, let me once again read, and then I will explain what variable overhead and fixed overhead. So when I am coming to finished goods, so what is that? First, we need to find out cost of purchase of raw material, then add conversion cost, then add other cost. What is the cost of purchase of raw material? It is invoice price minus trade discount rebate plus non-refundable duties and taxes plus other cost to bring the raw material in present location. Same thing. Whatever. Carriage inward, transportation cost, insurance in transit, loading, unloading, whatever you need to add. This become cost price of raw material. In this we'll add conversion cost. Conversion cost means direct labor that will be given, and production overhead. Production overhead, it can be variable overhead and fixed overhead. How to allocate that I need to explain. Then and add any other cost which will bring the inventory in present location and condition for sale. All other costs will be also added. That will become the cost price of finished goods. Correct? Understood. Now coming to variable overhead, and we are discussing about production overhead. Production overhead. Correct. Now first is variable overhead. Suppose you have incurred variable overhead 10 lakh. Correct. And your actual production in units is equal to 10,000. But your normal production in units is 12,000. So what is actual production? What is normal production? Actual production means what is actually produced. Now normal production means what can be produced in the normal level of efficiency. Correct now? In a normal level of efficiency, the company can produce this much item, that become what? Normal production. For example, I can teach for 8 hours every day. So 8 hours is my normal number of hours. But sometimes due to some fever, etc., I may teach 5 hours, 4 hours. That is my actual number of hours. So this is normal This is the actual, but can you say variable overhead vary according to this only? And therefore, no doubt, can you say variable overhead will be allocated to each unit on the basis of actual production. Because variable overhead vary according to actual production, and therefore, I don't variable overhead will be allocated to each unit on the basis of actual production. So what we'll do? What is the variable overhead? VOH means what? Variable overhead per unit, that is 10 lakh divided by 10,000. 10 lakh divided by 10,000 is equal to 100 rupees per unit. Okay, got this point? 100 rupees per unit. I think in this no doubt. So variable overhead, very simple, it will be allocated to each unit on the basis of actual production. I think no explanation required, you have understood. Coming to point number B. Point number B. Fixed overhead. This is interesting. The fixed overhead, let's say 10,000, sorry, 10 lakh. Fixed overhead is 10 lakh. Means this is the total incurred during the year. Correct? This is total cost incurred during the year. Fixed overhead. Now, normal production, let's say 10,000 units. Now, one thing is clear that fixed overhead is actually do not vary according to actual production. It remains constant. It remains constant. Means if you can normally produce 10,000, correct? So if you want to recover entire 10 lakh from your production, you should produce 10,000 only. You should produce 10,000. Got this point? I understand that you have understood. Correct? Means if you want to recover entire 10 lakh, means you should produce how much? 10,000 units, that is normal capacity, your normal production which can be produced in a normal level of efficiency. Means if you are efficient in your production, you can produce 10,000. Now there can be three cases. Case 1. Case 1. Try to understand whatever I am saying. Case 1. Actual production is equal to 10,000. Means normal production and actual production are same. Can I say a rare situation? Normal also what 10,000, actual also 10,000 is jadoo hai. Chalo theek hai, but from examination point of possible. Then no doubt either you divide by 10,000 or means either you divide by normal production or actual production, it will remain same only. It will remain same only na? Yes sir. I hope you are understanding. Got this point? Are you able to understand? In this case, your fixed overhead per unit will be 10 lakh divided by 10,000 means 100. Means 100. I think no doubt. Correct. Are you able to understand? Correct. Case number 2. Case number 2. Now your actual production let's say is equal to 8,000. Means you should produce 10,000, but you have actually produced 8,000. Means there is some inefficiency. Means you are not efficient in your production, and due to that reason you have produced what, 8,000. Means can I say it is nothing but because of abnormal loss, and abnormal loss should not be included in the cost price of inventory. Already we discussed today only. Abnormal loss cannot be recovered from customer. Abnormal loss should be charged to profit and loss account. Abnormal loss should not be recovered from customer. It should be removed from the cost price and charged to PL account. Today only we have done. Understand why the basics I have done? Because of this reason. So in this case, we'll divide by what? 10,000 only. Because you should produce how much? 10,000. You have actually produced 8,000. It is not of any sense. Means you should divide by what? 10,000. So what we'll do? Fixed overhead per unit will be 10 lakh divided by 10,000 is equal to 100. Correct? Means how much is included in the cost price of inventory? Included in cost price. What is your actual production? 8,000 into 100 means 8 lakh will be included in the cost price of inventory. Means out of 10 lakh, 8 lakh can be recovered from the customer, and 2 lakh is actually abnormal loss, which would be charged to profit and loss account. So in these, abnormal loss will be how much? Abnormal loss will be 10 lakh. How much can be recovered from customer? 8 lakh, and 2 lakh will be charged to PL account. Got this point? Means included in the cost price means recovered. So you can recover only from the unit which can be sold, and you can sell only 8,000 units because you produce only 8,000. So you can recover 8,000. You can recover only on the units 8,000 which has been produced and can be sold. That is rupees 100 per unit. Means you can recover 8 lakh. How much you can't recover from the customer? That is 2 lakh. That is abnormal loss, and that will be charged to profit and loss account. Understood? Means can I say from case number 1 and case number 2 we can understand that fixed overhead will be allocated to each unit on the basis of normal production. On the basis of normal production. Got this point? But ruko. Can we conclude right now in this way? If fixed overhead should be allocated to each unit on the basis of normal production. On the basis of normal production, I hope you are able to understand. Now, coming to case number 3. Case number 3. Correct? Now your actual production so it is 12,500 units. 12,500 units. These all are units, huh? 12,500. Now, what will be your fixed overhead? Don't write. Just don't write. Try to understand what I am saying. If you apply the formula that fixed overhead will be allocated to each unit on the basis of normal production, so what you will do? 10 lakh divided by 10,000 is equal to 100. Means how much is included in cost price of inventory? Actually produced 12,500 into 100 means become 12 lakh 50,000. Now, oh my god, what happened? Means in this case you have produced what? 12,500. Means you can sell 12,500 unit. Means you can recover from 1 unit 100. Means you are able to recover 12 lakh 50,000. Whether it is practically possible, you have incurred 10 lakh. Can you recover more than that? 10 lakh? No, not possible. Means here the formula defeated. Are you getting what I am saying? And therefore AS2 says that fixed overhead will be allocated to each unit on the basis of actual production or normal production, whichever is higher. Actual production on normal protection whichever is higher. It means in this case what you are supposed to do, fixed overhead per unit 10 lakh divided by actual protection on normal protection which is higher, and higher is 12,500. So if you do 10 lakh divided by 12,500, it will come 80 rupees. It means how much is included in the cost price, means 12,500 into 80 is equal to what? 12 is equal to what? 10 lakh only. Means what was your fixed overhead? 10 lakh, and how much is included in the cost price? 10 lakh. Means there is no abnormal loss. There is no abnormal loss. Just try to understand in costing there is no concept of abnormal gain. There is only concept of abnormal loss. There is no abnormal gain. Got this point? Have you understood this point? Of course, now whatever cost you have incurred, that much you can include in the cost price. You can't include more than that. Can you include whatever is not incurred? It is practically impossible. Have you understood this? Means can I say in this way, the variable overhead will be allocated to each unit on the basis of what? On the basis of actual production. But fixed overhead will be allocated to each unit on the basis of actual production or normal production, whichever is higher. Actual production or normal production, whichever is higher. Means if I represent these three cases, case 1, case 2, case 3. What is my normal capacity? Normal production, I have given how much? In all 10,000, 10,000, 10,000. What is my actual capacity? First one is 10,000, second one is 8,000, third one is 12,500. It means allocated to each unit, allocated on what basis? Allocated on what basis? Allocated on what basis? In first, either you take normal or actual, both are same. So here 10,000. In second, it is 10,000 higher one. In third, 12,500. Understood? Higher. We'll take higher. We have taken higher only. So higher, higher, higher. Understood? Have you understood this point? Very important from examination point of view. Super important. So now it is same thing is given. Allocated to each unit on the basis of actual production, variable overhead. Allocated to each unit on the basis of actual production or normal production, whichever is higher. Whichever higher. So for fixed overhead, what to do? Fixed overhead divided by actual production or normal production, whichever is higher, multiply by actual production. Multiply by actual production. So how much will be included you will get? How much is included you will get? Got this point? Have you understood? Bolo. Chalega. There is one question. Let me take that question. This much you understood na? Come to question number 18. Kirti Limited is in the business of manufacturing computer. Okay, sir. During the year ended 31st March 2024, the company manufactured 550 computers. This is actual production. Okay. It has the policy of valuing finished goods of stock at a standard cost of 1.8 lakh per computer. Means they are saying it is a policy of valuing finished goods at a standard costing of 1.8 lakh per computer. We need to see whether it is correct or not. The details of cost are as under. Raw material consumed 400 lakhs. This is 400 lakhs. Direct labor 250 lakhs. Variable production overhead 150 lakh. Fixed production overhead including interest of 100 lakh. Oh, including interest. So the question is that can we add interest? Right now we have not discussed, but interest cannot be added to the cost price of inventory. Interest cannot be added to the cost price of inventory. Correct? Why it will not be added? I will explain later on. Means this is the very easy. I think no discussion required. Value per computer for the purpose of closing stock. Material given 400. Direct labor given 250. Variable production overhead. Can you see total will be added 150. Now 290 is fixed overhead because they have not given normal production. So can you see we'll always assume actual production, normal production are same, and 290 will be entirely allocated. But from that we need to deduct what 100 lakh. So 290 minus 100, it become 190. That become 990 lakh. Now 990 lakh. What is the actual production? That is 550. You can see assumed to be normal production. So actual production, normal production has been assumed to be same. So whenever question is silent, always assume actual production and normal production are same. So 550 to 990 divided by 550, it is 1.8 lakh. So the answer is correct. You can see they have also said per stock they want to measure at 1.8 lakh. This type of question will come. Super easy. Understood. So just write down one note. Whenever question is silent, assume actual production and normal production are same. Just write down. If question is silent, assume actual and normal production are same. Chalega? Yes, sir. Now the last point of today's class, excluded from cost price. What is excluded from cost price? In simple word, can I say whatever is not included, that is excluded from cost price? Means whatever is debited to PL account, that is excluded from cost price. Whatever you debit to PL account, trading account, not PL account, whatever you debit to PL account, that is excluded from cost price. Okay, sir. The cost to be excluded from the cost of inventory and recognized as an expense in the period in which they are incurred. So recognized as an expense means that will be charged to PL account. So first is abnormal loss. Abnormal loss. Understood. So abnormal loss will not be included in the cost price, that will be charged to PL account. Second is storage cost. Now storage costs are two types. What storage costs which are necessary for production process, then it will be included. But any storage cost which is not necessary for production purpose will not be included in the cost price. For example, storage cost of raw material will be included. But storage cost of finished goods, once the finished goods produced, as you are storing in warehouse and you are paying rent for that, that will not be included. So storage cost, unless this cost are necessary in the production process, then it will be included. Means storage cost, storage cost of raw material will be included, but storage cost of finished goods will be excluded. Very important from exam point of view. Then any administrative overhead. Administrative overhead means any office expense, any admin expense to administrate your business, that will not be included. That do not contribute to bring the inventory to their present location. But if they are contributing to bring the inventory in present location, then that will be added. Normally, if the question is silent, admin overhead will not be added. Overhead means expense. When I say overhead, from costing point of view, we say overhead. From accounting point of view, we say A. What? From accounting point of view, we say expense. So overhead and expense are interchangeably used word. Okay. Then any selling and distribution cost, selling and distribution, whatever expense will never be added because that is for selling purpose or distribution purpose. That cannot be a part of cost price. For example, bachpan mein you have done carriage inward trading account, carriage outward PL account. Why outward? So outward means selling expense. Selling expense will not be added to the cost price of inventory. Borrowing cost means interest cost. Right now we have done, it will not be included. Halaki, AS2 is silent about borrowing cost. So from AS2 point of view, it will not be included, but it may be included subject to the requirement of one more accounting standard, that is AS16. So AS16 says that in some situation it may be included in the cost price of inventory. When it will be included, that we discuss under AS16. Chalega. So subject to the requirement of AS16, borrowing cost, if the question is silent in this chapter, it will not be included. It will not be included. So this is very important. This can be asked in multiple choice question. What are excluded from the cost price inventory? Can you repeat with me? First, abnormal loss. Second, storage cost unless it is necessary for production purpose. Then administrative overhead. Then selling and distribution cost. The last, borrowing cost, but it may be included subject to the requirement of AS16. Okay, sir. Then there are some attention point is given. I have already done cash discount. All settlement discount will not be deducted. It will be transferred to PL when received. Already done. Now, this to already discussed, cash discount. Now coming to, can I ask one question, the last question for today's class. Whether depreciation will be included in the cost price or will not be included? What do you think? Depreciation you know now. Depreciation, whether it will be included or it will not be included in cost price. Just think. So depreciation, just try to understand, depreciation on those assets which are used in production purpose, okay, that is directly attributable. So any depreciation of plant and machinery which are used in production purpose will be added to the cost price of inventory. But any depreciation of those assets which are not used in production purpose, for example, if I say office equipment or any furniture, etc., that are not engaged in production purpose, that will be charged to PL account, that will not be included in the cost price of inventory. Simple. So depreciation can be of two types, whether it is whether the asset is used for production purpose, depreciation included. If they are not used in production purpose, depreciation not included. Very important. Depreciation and amortization. So depreciation and amortization, whether they are different or same, from calculation point of same, but from terminology point of different. Depreciation we normally use for tangible asset and amortization we use for intangible asset. So whenever we say amortization, it is nothing but depreciation of intangible asset. Okay, sir. So depreciation and amortization expense will be included in the cost price inventory if such asset are directly used in production purpose. For example, if you are using some patent is what? Your intangible asset for production purpose, then the amortization of that patent intangible asset will be included in the cost price. Okay, sir. Then normal loss, this point already I have explained today, but I will take some question for this normal loss and abnormal loss tomorrow. Today this much only. Bata. Have you understood each and every point? Any doubt? I hope you have understood. This is actually the first class for CA Inter, first second class, but we have done basic in the first class. So I will say this is only the first class for CA Inter. So I am not taking much, this much only. But you have understood AS. AS में theory is more, content is more. So now your learning process will totally change for accounts. Means from solving question, now listening will be more and solving will be less. Till accounting standard is done. So whenever AS is there, whenever I am teaching accounting standard, you think sir is teaching, sir is only what? Discussing, not taking any question. Why? Because I need to discuss the content. Then only I can take that questions down. Got this point? So your learning process will little bit change. Okay, sir. Thank you very much for today. I hope you understood whatever we have done. Let us meet in the next class. Till then, enjoy your remaining day. Bye bye. Love you all. But come in the next class after revising whatever we have done today. Thank you very much. Bye bye.